China's dominance in the global electric vehicle market continues to grow, driven by a combination of robust subsidies, a wide variety of EV offerings for consumers, and slowing demand for EVs in other parts of the world. Over the past decade, Chinese automakers have experienced an extraordinary rise, establishing themselves as leaders in electrification. This momentum now places China so far ahead of competitors in the US and Europe that it would take a monumental effort for these regions to catch up. China's electrification boom. Recent sales data paints a striking picture of China's position in the global EV landscape. According to China Passenger Car Association, China's EV market accounted for a staggering 76% of global EV sales in October. This includes what are referred to in China as new energy vehicles, a category that encompasses fully electric vehicles and plug-in hybrids. Between January and October of this year, global NEV sales totaled 14.1 million units, with 69% of these sold in China. By comparison, the United States managed to sell only 1.28 million NEVs during the same period, representing less than 10% of global sales. In Europe, automakers sold 2.32 million units during the first 8 months of the year. However, growth in Europe had slowed, with legacy automakers struggling to gain traction in the EV market. Breaking the NEV category into its two primary components reveals more about China's dominance. From January to October, the country accounted for 63.2% of global fully electric vehicle sales. Its share of plug-in hybrid vehicle sales was even more commanding at 78%. These figures underscore the massive scale of China's contribution to EV adoption worldwide. While Norway remains a key driver of EV adoption on a per capita basis, its numbers pale in comparison to China's sheer statistical significance. Concerns about overcapacity. China's rapid rise in EV production hasn't come without challenges. Analysts have raised concerns about overcapacity in the Chinese EV market. With dozens of automakers competing for market share, production may outstrip demand, potentially leading to excess inventory that could flood other regions. The Global South, in particular, has become a growing market for Chinese EVs. However, this trend raises questions about whether these regions can absorb such a large influx of vehicles. In response to these dynamics, governments in the US, Canada, and the European Union have implemented protectionist measures to shield their domestic industries. The European Union, for instance, has imposed tariffs of up to 45.3% on Chinese-made cars. Meanwhile, the US and Canada maintain a 100% tariff on Chinese EV imports. While these measures may help sustain domestic production in Western markets, China's domestic EV market remains largely unaffected and continues to expand. Government support and subsidies. One of the key factors driving China's EV success is its government's unwavering support for the industry. In July, China doubled its EV subsidies, offering buyers who replace their gasoline-powered cars a subsidy of 20,000 yuan, up to 10,000 yuan earlier in the year. This move underscores the country's commitment to accelerating the transition to electric mobility and reducing greenhouse gas emissions. In addition to direct financial incentives, China's government has fostered an intensely competitive EV market by supporting a wide range of automakers. Companies such as BYD, SAIC, and XPeng have emerged as major players, while newer entrants like Xiaomi are also vying for market share. This fierce competition has driven innovation and lowered prices, making EVs more accessible to the average consumer. However, market analysts predict that only a fraction of these companies, perhaps fewer than 20 out of the current 137 EV brands in China, will achieve profitability by the end of the decade. The US and Europe lagging behind. While China's EV market surges ahead, the US and Europe face challenges in keeping pace. In the United States, EV sales accounted for less than 10% of global NEV sales between January and October. Europe fared somewhat better, but its growth is slowing as legacy automakers struggle to adapt to the EV revolution. Many traditional car manufacturers in Europe have been slow to pivot away from internal combustion engines, leaving them ill-equipped to compete with more agile EV-focused companies. In the US, the EV market's growth is further complicated by political factors. The incoming Trump administration has signaled its intention to repeal EV incentives for both consumers and manufacturers. These incentives have played a crucial role in driving EV adoption by reducing the upfront cost of electric vehicles. Their removal would make it harder for U.S. automakers to compete with China, potentially widening the gap between the two markets. The Global South, a new frontier. As China's domestic EV market matures, automakers are increasingly turning their attention to the Global South. Countries in Africa, Southeast Asia, and Latin America are emerging as key markets for Chinese EV exports. These regions offer significant growth potential due to their relatively low levels of vehicle electrification and the affordability of Chinese EVs. By leveraging their cost advantages, Chinese automakers aim to establish a strong foothold in the markets before competitors from the US and Europe can catch up. However, the influx of Chinese EVs in the Global South raised questions about sustainability and market dynamics. Will these regions be able to absorb the large volumes of EVs being produced in China, and how will local industries respond to the competition from well-established Chinese brands? The competitive landscape in China. China's domestic EV market is characterized by intense competition among automakers. Established players like BYD and SAIC face stiff competition from newer entrants such as XPeng and Xiaomi. This cutthroat environment has driven innovation and forced companies to continually improve their offerings to attract customers. Features like advanced driver assistance systems, extended range, and competitive pricing have become standard as automakers vie for consumer attention. Despite the market's vibrancy, profitability remains elusive for many players. Analysts estimate that fewer than 20 of the 137 EV brands currently operating in China will be profitable by 2030. This suggests that consolidation is likely in the coming years, with stronger companies absorbing or outlasting weaker competitors. Protectionism and trade tensions. The rise of China's EVs market has not gone unnoticed by other countries. In an effort to protect their domestic industries, the US, Canada, and the European Union have implemented tariffs and other trade barriers targeting Chinese EVs. These measures aim to create a more level playing field for local automakers, but they also reflect broader geopolitical tensions between China and the West. For example, the European Union's tariffs of up to 45.3% on Chinese cars are designed to prevent Chinese automakers from undercutting local brands. Similarly, the US and Canada's 100% tariffs on Chinese EV imports serve as a significant deterrent to Chinese manufacturers seeking to enter these markets. Additionally, proposed bans on Chinese-origin software in future EVs highlight the growing focus on security and technological sovereignty. Looking ahead, China's lead in the global EV market shows no signs of slowing down. With strong government support, a highly competitive domestic market, and growing export opportunities, Chinese automakers are well positioned to maintain their dominance. However, challenges such as overcapacity and profitability loom large, particularly as competition within China intensifies. For the US and Europe, catching up with China will require significant investment in EV infrastructure, innovation, and consumer incentives. The potential removal of EV subsidies in the US under the incoming Trump administration could further hinder progress, making it even harder for American automakers to close the gap. Meanwhile, the Global South presents both an opportunity and a challenge. While these regions offer significant growth potential, their ability to absorb large volumes of Chinese EVs remains uncertain. As Chinese automakers expand their presence in these markets, the dynamics of global competition in the EV industry will continue to evolve. China's rise as a leader in the EV market represents a seismic shift in the global automotive industry. With its massive domestic market, strong government support, and a relentless focus on innovation, China has set the standard for what's possible in the transition to electric mobility. While the US and Europe face significant challenges in catching up, the intensifying competition promises to drive further advancements in EV tech and adoption worldwide.